Is there more downside ahead? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Tommy Thornton, founder of Hedge Fund Telemetry. Hey, Tommy, how you doing?
Maggie, I'm great. And how are you?
I'm doing okay, I have to say. Interesting action, maybe lack of, is what's interesting. We had a bunch of earnings out, which we can talk about if you're watching any of them. We have some stabilization today in metals and crypto for the moment, but we have a government that shut down again. So we have and stocks that rebounded. So a lot to discuss. But hey, everybody joining us live on Substack and YouTube. Drop your questions in. As always, we'll get to as many as we can. And if you are not a subscriber, please hit that button. So Tommy, talk to me about what you saw today, because it looked like maybe we were going to get some more selling, and then equities turned around and everything else looked like it stabilized. Does it feel like we're past whatever happened last week, or are there more air pockets ahead?
I don't think we're through like this period. And I'll look back and say back in October, the Nasdaq 100 peaked, hasn't made a new high since. The S&P has made nominal new highs, and we've been in this sort of range, and it's sort of the range of death of not being able to, get enough on the downside to buy dips that are, buyable in my opinion. And then, the people that want new highs are not really getting that either. It seems like every day when the market is up, the narrative is, oh, it's the greatest bull market ever. But you're not really getting the full participation right now. And you have a lot of the Mag 7. I mean, I'm looking right now, looking up there. I've got, my whole
all your Bloomberg, all your screens,
amphitheater of stuff. We have Microsoft is down 12.5%. Tesla's down 6.2%. Nvidia is down 0.5%. And then you have, the others up a little, under 10% up each for the Mag 7. And I think that you're really starting to see the winners in the Mag 7 emerge. And I'd say Alphabet is by far the best winner. NVIDIA is just sort of hanging around. It's well off of its highs. Meta had a great number. I'd probably like to buy that one a little lower. But it was a lot of these mega cap names. They have so many levers to pull that it's hard to make a good call ahead of time. But you also have this broadening theme, and I just don't see that really happening. You always get the broadening theme start at the beginning of the year. Every year you can go back and look at, oh yeah, we're gonna broaden. Yeah, maybe, I don't know. We'll see. Interest rates are still high, and we have a new Fed chairman coming, nominated. I actually think he's probably the best of the contestants that Trump interviewed. I think that because he probably has the most experience with the Fed by far, and he's been there in the trenches in some pretty hairy times. It's not all as perfect for Trump because he's not a big fan of QE. He's not a big fan of the balance sheet of the Fed. And I think the reason I kind of like him is that he will have some semblance of Fed independence, which I think a Trump loyalist like Kevin Hassett would probably do whatever Trump said. He'd cut rates, if Trump tweeted it out, and he'd say, okay, I'm going to do an emergency cut right here. So I think it's probably okay. I've heard some of the strategists out there, not thrilled about it. But look, I think that the Fed is sort of muted with everything. I think the fiscal problems are keeping interest rates high on the 10 and 30s. And that is a bigger issue to me and for the Treasury market than if the Fed cut rates. I mean, Trump wants to cut rates, but that's not going to do anything with the 10s and 30s. Because that's really set by the Treasury market, and that's what they need. And they're really close to breaking out. And I've had a bearish slant on Treasuries, and we're not so far from 5% on the 30s, and 430 is around the breakout I have on the 410 or for the 10s right now. So that's kind of what I'm watching there. I still think
you think yields are going higher on Treasuries?
Yeah, but I'm not necessarily, this giant bond bear in this environment. I had been. I think I'm skeptical as far as when I see people that say, I want to be buying bonds. Yeah, you're going to get a yield. It's not bad, but you could find yourself, if inflation starts to pick up, with that's possible. I think that one thing I noticed last CPI, one of the biggest components that went down was gasoline prices and some of the energy products. It was down like 5%. And unleaded gasoline is starting to tick up a little bit. Not like it's getting to a place where we're like, oh no. But if it keeps going that way, well, then you're going to have inflation. It's going to show up, and that'll probably give some pause for the Fed. And it looks like the Fed's not doing anything till the summer anyway. So except talk and talk and talk and talk and talk.
And we'll go through the lovely confirmation hearings, which is always, great for confidence. Did you believe that Warsh's appointment and this idea that he's going to, support Fed independence, do you think that's what turned metals? That sparked that huge move in metals?
Well, he is definitely the least dovish of all the contestants, and that went into The Apprentice, or the dating game, as I called it recently. So I think that the metals market was grossly overdone on the upside. I think that when you have some of the major programs and business programs that are starting with, look at that silver run, look at SLV, and everybody's talking about it. It attracted a lot of new buyers, and you had some real nasty little ups and downs at the highs, and then it just fell apart. I think, Warsh, it's on him, because I think that the necessarily easy, super dovish scenario didn't happen. But I think it was just a matter of positioning, and people were positioned too long in those, and look what happens. So I was short SLV, and I covered it on Friday. So it worked out okay. Not
good
like
for you.
It worked, but
do you feel like this is just that sort of cleaned out some of the froth, but we're in an environment where metals are going higher? It's a sort of new regime where everyone's sort of losing faith in the dollar, moving to gold, because that's the narrative that's been behind it. Do you think that is still intact, or was that maybe not all it was cracked up to be? And
it might take a little bit of a break from that. And I will say, and I heard a lot of people were asking me on Friday, should we buy GLD and SLV? And I was like, why don't you just give it a little time and let it stabilize? Everybody's like dying to buy like every little dip, and in that regard. And the problem is you have a lot of people that are trapped higher. That creates a lot of overhead resistance, and it's just going to take time with monumental slams like that for that confidence to come back and stabilization. You're going to need more than a day, or for some people it's like more than an hour.
Yeah. I mean, we talk about this, right? Because it's like the sort of gamification of trading and investing, and there's always a worry. I mean, is this like a fundamentally driven thing, or is this just speculative?
Well, I think you have this speculative crowd. I wrote about it today, and I've called these speculators nomads, because they've gone from one thing to another, and they have no idea what they're buying, and at so many times, and they just go because it's green, it's going up, and the crowd just goes, hog wild for GME or meme stocks or crypto or NFTs or quantum computing, other things that just sort of come into the fray, and metals with SLV, and that was a crazy one. And I saw somebody sent it in my Bloomberg chat, that somebody was saying that it's going to go to 300 to 500 by the summer. And usually when I see people put like price targets that have to go up 200, 300, 400%, whatever, after 100+% move, quickly,
Mm.
I tend to fade those. I tend to look at those and think, well, that's a bit of clickbait right there. So,
Yeah.
and it still could come back because and the dollar basically had a DeMarc buy countdown 9. It was getting a little overdone, and I thought, well, that could bounce, and maybe that would cause some of the, the metals froth to unwind a bit. So that is what I did and what I have been seeing in that. So it's just this constant, we're going to go from one thing to another. Now they're in memory, memory chips, and those are going bananas on the upside. I am short a few, and no, it doesn't feel good right now, but I'm okay. It's small positions, nothing to cry over right now.
I like this idea, and I think it's really important because I think when it was a meme stock, it was clear that it was just speculators getting together and running this thing up the flagpole. I think when we were talking about gold and silver, there were a lot of people who, what you heard was we're in a new era. We're in a commodity super cycle, and you have to increase exposure to it. This is, instead of bonds, this is what you should be doing. There was a lot of fundamental talk behind it. And so I think if you're thinking about it as a gang of speculators, and this is where their attention's turned, that has a different feel to it than maybe a sort of, and I'm not saying it's exclusive, right? There may be a bit of truth in both of those things, but that's interesting to me. I
would 100% agree, because gold, back in August, September, I started to get a little bit more constructive, and the whole commodity, the Bloomberg commodity index started to show some signs that I look at, and I started saying, hey, maybe we're going to start to get some commodities working. I also thought that the metals just got a little overdone, and gold has been the most resilient of any commodity for several years. So I can't say that it's over. No, I'm just saying, let's just give it a break and we'll see what happens. I think that the weak dollar is something that the administration wants. Scott Bessent is sort of a fan of the Shinzo Abe playbook and, kill the currency. But I was talking to Julian Brigden about this. I said, so if they kill the dollar, who else, it's all these other currencies want to get murdered too, to help their own economy, especially Japan. Who's going to win? And he said he thought the dollar could go lower, and I think it can. But I think you're going to see a bit of stabilization here on the dollar for a little bit.
Yeah. It's super interesting. I just talked to Luke Grumman today. That interview will be coming out later this week, and he had some thoughts about that devaluation. It's always tricky, right? Race to the bottom, and if it's not orderly, you blow things up along the way. So how do you manage to do that? It's more complicated than you can say you want a weaker currency, but it's tricky.
Yeah, look at the yen. Japan has basically wanted the yen to devalue. Now they have inflation, which now it's the first time in 30 years that they've had inflation. Some of their companies are raising prices, and people just don't understand that prices have never gone up in Japan for so long, and now they are, and with their rates are moving higher, and that's causing our rates to move higher as well. So there is that out there, and with people have talked about it for years, decades, and possibly that is starting to percolate on the risk radar out there.
Yeah. And it's something, as you say, that's easily dismissed because people have been warning about it for decades. And so there's this feeling that there's always a way to wiggle out of it. But it's starting to get kind of interesting and dicey. I want to ask you about Bitcoin, because this has had some people scratching their head if, when you saw everything else moving and concerns, and if it really was a store of value, it sort of hasn't shown up in that way. And we saw that big weakness again over the weekend. Now, again, it's stabilized a little bit here, but has it found a floor, or do you think that it's still going to move lower from here?
Well, just so people are clear, I think the last time I was on, I did mention I was short IBIT, the ETF, and I do a lot of work looking at positioning, and I look for circumstances when people are overly short something, I will buy it, or if they're overly long and trapped, I'll short it, and that's just part of the process that I use. And there were a lot of people that were trapped in IBIT and Bitcoin higher with all the good news, and things top on good news. They usually bottom on bad news. So I really haven't seen any necessarily bad news yet. And we had DeMark sell countdown 13s, and in the fall we've had lower highs, and now I see it. We're in a wave pattern of 5 waves. We're now in the 5th wave going down. And, we have Michael Saylor, who his cost basis is $76. I've heard people from his company and him say, Bitcoin can go lower. We're not going to get margin called. We'll see. And I don't know. I really don't know the structure of it, but it definitely seems precarious. And there's a lot of leverage always in these crypto names and crypto assets. And lower prices usually shakes people out. So that is, I still think that there's risk in it. I'm not necessarily saying there's a bottom. If you have one uptick day, it's going to take time. And just so everyone knows, when Bitcoin was at 15, 16,000, we had DeMark buy signals on the lows, and people wanted to dismiss those as well. So I rarely get a lot of kudos when I say it's now time to buy or time to sell. So I'm not looking for it either. But the point is, it's usually when things look the absolute worst is when I'm starting to circle around and say, hey, maybe it's something that we can get involved in, long or short.
Yeah. It's it's the classic. It's easy to say that. It's so hard to do it though, because when you're doing that, the news is so bad. So if you're not, for the rest of us mortals, it's like you think you're going to be able to pull the plug, but gosh, it's hard to do that.
Well, one good thing, like go back to last April, and I was short in Q1 a lot, and I was covering because I could see the Goldman Sachs, Morgan Stanley prime brokerage data was showing that people were, the highest, they were selling, massive amounts and selling short. So that gave me the fuel in the future to say, hey, if they turn this thing around, those people are going to have to cover. They did. The market's gone like bonkers, way past anything I thought would get to. But, things change. And again, now I'm starting to see it sort of toppy because we're not really breaking out to new highs. We're not seeing the participation in some of those, Mag 7 names. And I just think if we break through these lows, then, the speculative crowd's going to, they're going to hit the red button.
Yeah. Well, that's if you have that presence, then things get accentuated, right? And especially with how quickly things could move, and then algos get triggered. You can see how this takes on a life of its own, and then momentum takes over. By the way, Catherine said, I'm Tommy Thornton's paid subscriber since early 2023, and I highly recommend his letter to everyone. Thank you, Catherine.
Thanks,
it's a good
Catherine.
One. So Palantir is out. I don't know if they're out, but they're coming out.
They're out. I'm looking at my screen here. They're up 7.5%. I covered my short, the rest of my short today, and I bought, which may not work, a straddle, the 150 straddle today. And it needs to go above 165 to break even, or 135. I'm fine with a little bit of risk there, and we'll see, how it trades tomorrow, and if the speculators come in and buy it up, I'll break even. I was looking really only to break even on the upside, because I was thinking more of the risk going down, because it's right at the 200-day, and if that broke, it could be Microsoft.
Yeah, gosh, that was something to see. When that happened, did you feel like the worst is over for Microsoft, or is that looking like a dog?
I was short Microsoft higher up, and I covered it and didn't get the full, shebang on the downside. Made a little, it was fine. I'm actually a little surprised at the reaction. Their earnings were fine. Then, I mean, soft here and there, but I think that's just sort of the market that we're in. The bar was pretty high. Software's been under pressure. OpenAI is under issue. I'm just getting a headline here. This one's breaking news. OpenAI unsatisfied with the speed of nvidia hardware.
Are they
OpenAI
breaking up in real time today? Because NVIDIA made a comment.
This is hitting me right here on my chat room. OpenAI seeking alternatives to NVIDIA latest AI chips.
I think that's in response to NVIDIA saying the commitment wasn't a commitment, it was a plan or something like that earlier today. Do you remember seeing that headline?
Yeah, that's a lot. To me, it just sounds like the circular nature of all the deals that we saw are starting to, let's say, unravel a little bit. I'm not saying they're fully it's gone, but Oracle's down over 50% off their highs, and they're having to raise money, ATM, stock issuance, debt. It's expensive to build all these things out that everybody wants, and I don't think that's a really good headline for the OpenAI NVIDIA relationship. But what do I know? Maybe they'll break bread and say, hey, we're cool.
Yeah. Everybody fights in public now, I guess, is how it goes.
Yeah, they do.
Love is a Battlefield asking, I don't see the volatility spike I was hoping for. I guess quarterly reports weren't that bad, question mark?
They're fine. They're you didn't get the volatility spike because I think vol's been, suppressed. And I think that if you break some levels, then you're going to get it. You haven't seen credit spreads widen, and that's still in my, one of my pieces that I post a lot on my notes. If that starts happening, then you're going to have volatility go up. And it's, it can't, a lot of people said, oh, silver and gold, all that, platinum and all, everything came, crashing down so fast. And suddenly that could possibly happen in the equity market. I wouldn't doubt that, because I think people are super positioned long. And I don't know if you saw the Citadel piece that Scott Rubner put out. He said that they're retail at Citadel, all their exposure, they're at the 99th percentile. So it's like that Dumb and Dumber, so there's 1% chance. Okay. I just think that people are positioned long. They're using leverage, using crazy stuff. They're chasing things that have already moved, and that just can bite some people. And it might bite some of the more common things. I mean, that's why I think Microsoft was hit. I think people were looking at it saying, well, maybe it's okay to buy it here. It's down. It was down like 20% off of its high, and you didn't have a lot of people short it. And if you don't have shorts, you're going to possibly get a larger outside reaction if your numbers are a little squishy.
Yeah, and it's the question everybody knows. The weird thing is, so many of these are just out in the open, right? Like, what's the moat? Is there a moat for AI? Like, we know that that's a concern, but none of the concerns seem to have been priced in anything. And I'm not suggesting that we have the answer, but it just seems when you look across super tight spreads, given everything, and granted, again, I'm coming off my conversation with Luke, but you sort of find yourself thinking, what could possibly go wrong, right? It's that suddenly all at once. Things can move really quickly, really fast.
It's also after you've had like these large moves and positioning gets so overdone, complacency comes into the market, and then all of a sudden, it doesn't even have to be that big of an issue. It could be just an issue that could really knock things down. It doesn't take a nuclear bomb to go off to knock the market down. It could be something that just doesn't fit, and positioning, being so complacent and on one side, could knock things down. And that has happened many times in my career, and I think that is a risk that we watch. I mean, it could be the bond market, could be Japan, it could be stuff that's going on with Iran. I'm not quite sure, but there's a lot of catalysts out there that I could mention that could could wake some people up.
Yeah. Someone asking, how are you feeling about OIH in this geopolitical environment with and oil price levels, the Van Eck Oil Services ETF?
Yeah, the one thing that I actually like crude on the long side. I don't like crude when you get a lot of geopolitical news in the mid East and Iran and all that. That sort of jams things up and artificially. But I have been warming up to crude and some energy. I think the interesting thing is that the energy companies have actually navigated $60 WTI crude really well. And I've been more a fan of natural gas. And I
Nat gas today, by the way.
I know.
Earning its nickname as the Widowmaker.
Yeah, it's down 25% today. I will say I documented in my notes. I did take my UNG long off on Friday. I had a DeMark, sell set up 9. I could see the weather coming through, and I knew that it was probably going to warm up a little, and the stuff in the Carolinas wasn't probably going to cause any disruptions. And I speak to a dedicated natural gas trader all day, and he kind of agreed with me. So I took my gain. I took a 25% gain or more, and walked away. And I didn't expect it to go down like this, but that's kind of the market that we're in. You squeezed out all the shorts in nat gas, and when there are very few shorts and there's, let's say, not so positive news, you can have these big giant moves. That same thing with silver and gold and platinum and some of the others out there, and that's going to be the case with some of these speculators that are in memory stocks, because they're people aren't really that short these right now. And I watch DRAM pricing, spot pricing. I've been trading technology for 30 plus years, and DRAM pricing and NAND pricing just went through the roof like nobody's ever seen before. I hate to use that term because it's like sort of the cliche term.
Well, it is the phrase for 2026, though, isn't it? Because we kind of haven't seen this stuff before.
No, it's definitely nuts. But DRAM pricing is starting to top out, and it's going to take a lot more for the prices to come down. But it's weird because we've had AI and build out for several years now, and all of a sudden, wham, memory becomes an issue, and everybody's freaking out about the supply. I'm not a conspiracy person, but it wouldn't shock me if Samsung, SK Hynix, Micron, the oligarchy of memory, said, hey, let's jam prices up, cause a giant squeeze in our stock, and call it a shortage. I've seen weird things happen in memory, but usually, well, always they pop and then they come back down. I'm not saying they're coming back down tomorrow, but I think that in the near term, in the next weeks, months, you'll start to see those come down.
I just want to share a comment that Christopher made. We were talking before about, what anything kind of could trigger this. And he made the great point that bond dealers are hung with a lot of inventory. Wouldn't take much to tip over the apple cart. Yes. And you're right about that. There's a lot of them are holding a lot of paper.
Well,
that's something to watch.
Think about this. Japanese yields are moving to highs that people haven't seen in decades. And if U.S. rates, Treasury rates move to new highs as well, those are losses that are on people's books. That's not necessarily any good news. That's the problem that I see. I mean, remember a couple of years back, we had, these regional banks that had long-term debt, and they went fully against them. A lot of them still have that, but the Fed and Treasury sort of say, well, we'll just you have to mark to market it. Don't worry about it. We'll just hold on to it, or lower your duration or do something. You're cool. We don't want to upset anybody. But those losses are still there. And so if we have I'm talking like Julian right now, if we have rates that go, to parabolic levels, it's going to cause some, real problems for a lot of people, funds, banks,
Yeah.
governments. That's the real risk. But
Yeah. And I think it is important to talk about because very few people are willing to time it. Some are more convinced it's going to happen than others, but you at least need to understand the risks if you're going to try to navigate this.
Yeah, I think that's generally what the conversation we're having today is. I want people to understand the risks out there that may or may not happen, but some of these risks are quite possible the way things are moving. And if you break one market, they're all sort of interconnected, and that to me is how I've seen other market dislocations and things break when a link in the chain breaks. And it could come from Japan, it could come from Europe, it could, who knows. But that to me is a real risk, because the one thing also is if there's a risk off type period, it's not going to be like everybody's going to just gravitate and go into gold or silver or Bitcoin or whatever. It's because there's so many giant funds out there, and what they will be doing is they will be selling across the board, looking for liquidity. So they're going to sell their winners to raise cash, and that's not going to necessarily hold up gold or silver, and that's happened in the past. So I would be thrilled to buy gold and silver a bit lower. I still believe in the trades, but not at these levels here. And I'd like to see the speculators get out of them a little bit.
And just and you think that we look vulnerable for a correction in S&P and Nasdaq?
Well, long-term listeners would probably say Tom's been looking for that for a while, which I admit. But we've had this range moving basically sideways for the S&P and Nasdaq for I think 4 or 5 months with nominal new highs. And look, I think it's vulnerable. It's frustrating for me because I like to buy pullbacks, and the pullbacks that we get are so shallow and fast that it's hard to adjust. It's great for like day traders and people like that, but that's not how I operate. But we'll get that if we break down some levels, and that's certainly possible. Yeah, then we'll have a conversation. Bring me back on.
I will. Tom, it's always great to catch up with you. I think that, it feels like important to have this conversation because even though we're all exhausted, we're only 31 days, 32 days into this new year. And there's a lot of risks out there. And so just, maybe take a look at your leverage. If you're using it, take a look at it and make sure if you got to do something that you're able to get out. Don't be one of the trapped people is my take.
Yeah, I think that's, fairly safe. There's long ideas that I am long some things, and I'm short things. So I'm always,
Is there a sector? Are you sector long, or is it real individual name for you? I know there's that one.
More name specific. I like energy. I'd be, happy to be buying some natural gas stocks if we get real pullbacks. But we'll see. I like some technology, believe it or not. Some in software starting to line up for me, and just because they're steady earners and growth companies that make sense. And and when I do this, I'm doing it in a very measured way. It's not like I'm 15% in a particular name. I'm 2%. I'll just start small. So that's kind of what I'm doing right now. I'm just trying to be patient. I have some shorts. I have some shorts that are not working. But Palantir was a tough short, and it actually ended up turning out to be profitable. So that's nice.
It's hard to short, Tommy. It's hard.
I've done this a long time. It's also hard to be long at certain periods, and I'm accustomed to it. I'm wired for it. I've done this for a long time, so it's hard to be short, but when they're not working, but it's also, it's hard to be long when they're not working as well.
No, that's
But
so true.
it's just, I see risk from both sides, and I'm sort of, again, I'm wired differently in some regards.
I think that one thing that I think is important for everyone, though, is if regardless of whose newsletter you're signing up for, what you're tuning into, try to pay attention to people who've been around through experiences and crisis before, because I kind of feel like it's important right now. And when I talk to a lot of you with experience, there's concern, there's some things that don't add up there in market. And so, something's got to give. So I think it's important to,
I agree. I look for people like that
around, who've been around, seen it.
I look for people like that too. And let me tell you, I also look for people that are newer into the market, that are really, they have a good ear and eye on things, because they're more than happy to take, big risk at certain periods. And I watch that as well. Yeah. And kudos to the retail people out there that have done very well. I just think that, you got to remember to, step aside from the table after you've had a winning hand for quite a while. It just, book some profits. Don't be, too greedy and at times. And that's what usually always causes the problems for people. I just, you're gonna get me, Maggie, sometime this year when I'm like raging bullish. And
I will. You are. And we had some people asking. I specifically did not ask Tom about Tesla today, because he's always generous about talking about it, but he looks at so many more things than just Tesla. And he's on X talking about it. So you can find his comments there, because I feel like there's a lot more going on in the universe, and we could talk the whole show about Tesla, but I thought it was important to get some other thoughts from you today.
Yeah, I'm still not necessarily positive on Tesla.
I think that comes as a shock to everybody listening, Tom.
Well, the valuation makes absolutely no sense. I don't think they're going to have robots working as they have promised for years. I don't think they're going to necessarily make money from it. I don't think that the robo-taxi dog and pony show that they're doing in Austin is level 4. It's not even approved by the state at this point for autonomous, like Waymo is. And Waymo has its own problems too, but I'd rather be in a Waymo than a Tesla. So there's a lot to talk about there. And then good old Elon shows up in, the Epstein report. God damn. I mean, it's just crazy. And then they're going to merge, oh my God, it's like Solar City again. I just don't.
Paul says Elon's holding on the phone for Tommy.
He once tweeted back to me one time I put something out there, and I wasn't saying anything that like dramatic, and I don't talk like negative, like dramatic about him on Twitter. I just sort of go with the facts, and sometimes a little comedy is in there as well. But yeah, when he tweeted back to me, that was fun. I had Grant Williams hit me up, and he's like, "What is going on?" I'm like, "I don't know what." And he goes, "Do you see what's happening?" I'm like, "Okay, I see." That was nuts.
Well, it's super fun. And it's always great to catch up with you, Tommy. Appreciate your time always. Good luck with the markets.
Thank you.
Thanks, everybody. We will see you again on Wednesday. We're going to have Noelle on, and she's always all over, not just macro, but crypto. And she's been having a lot to say. So if you're interested, please make sure to join us, and we'll do as many questions as we can there too. So we'll see you then. In the meantime, take care and good luck out there.